Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Wednesday, the 16th of September, 2020. Well, we had the FOMC today. I write about it in my evening reports, covered what both the statement said and what Fed Chair Powell said afterwards. And suffice to say, the Fed does not see inflation coming back to haunt us anytime soon. They foresee in their own projection interest rates not moving far away from where they're at until 2023. They're very concerned about COVID. Everything changes if we get a COVID vaccine, treatments, whatever, because employment is what they're looking at, and you need to see the markets get back to closer to full employment than up here near a double-digit number that has fallen, admittedly, but still too high to get things that the Fed wants to see in the economy going. They did say over the past 60 days they've seen an improvement, but it changes like that, so the concerns are there. Suffice to say, they have the markets back. You had a good rally today in the bonds, giving that back unchanged during the day. They sold off late in the day. Natural gas in a problem here. Energy markets trying to hold on. They had a good rally. I don't know what that was about, frankly. But when you take a look here at the S&P 500, you can see how you've backed off from a high of 34.85 and a quarter settlement, and you're down in rough figures 100 points, and that's with the market up 57 points for the week. So far it's been a good week for the market. If you'll recall that pattern that I told you when I was watching people on TV saying, oh, that's bullish. I don't understand what's bullish about that pattern. That pattern to me broke trend lines, it's gone sideways, and now the market's got to figure out what the next setup is going to be. Has it done so? Well, it's tipped its hand a bit. It is bullish. Market has a pattern of higher lows and certainly higher highs. That's friendly in the marketplace, but it's not able to get over that 18-day average of closes and stay there. It can attack it, but it hasn't done anything with it. So that keeps the bias of the market down. The Bollinger Band, you hit it once down here, you hit it up here, you had run up to that, and finally when it gave up, it went straight on down. It's more or less sideways action, as I said. And slow stochastics, well, the momentum is not pointing up. It got out of oversold condition, but it's just drifting sideways, sort of with what the market is doing. There's no tip-offs there. In the NASDAQ, we still have a pattern of three lower highs, lower low. Well, I don't know. If we take a look at the lows, and we should, this particular low was 10,924. This one, 10,924.75. So the answer is you do have lower lows. You have the lower highs. If you look at this high at 1539, I just want to check if I'm right on this. This was 1554, so I am right. Lower highs, lower lows, that's still bearish, but too oversold. So part of what happens on a checklist, if you build a trading system, if you're an algorithm, if you're a trader, you're looking for reasons against ideas you might have, not to enforce them. You don't need the reinforcement when you've come with an idea. You're looking to see, is there anything there pointing the other way that you shouldn't do? That to me is a warning sign that the market's got still an oversold condition for the bears. In the Dow, all we've done for the past 4 days basically is hang around that 18-day average and can't do much with it. I call that the line in the sand for a reason. When markets are above it, they often fall back to it. When below it, they'll go there. And from there, new trends come about. I think the markets are all waiting to see what's going to happen with the other central banks in the morning, but that I don't know if that's the case. In the Russell, we have friendlier market. This is the only one that's in a bullish setup. It's got higher lows, higher highs. The support is at 1544.70, but it's a monstrous amount of risk. You're not wrong unless you take out the last break low the way that I teach charting, at least, to 1477.60. Forget that. That's a monster risk. In the VIX, the trend is still down. Well, with the VIX still falling here in the cash, that says that the stocks underneath everything, people aren't worried about anything on this pullback. I've been pointing that out each night to you as well. In the T-bond market, you have a classic now higher high, lower low. You stepped out of the trend. It's sort of stuck here at the 18-day average. I didn't see anything in the Fed statement today that said the Fed's turning its attention to longer term where the yields are. They're going to keep their buying. They said they've got plenty of ammo left in their toolbox, and they'll do what they think they have to do. The one question that was asked is, how will they get inflation up to a number they haven't been able to hit for a very long time? Their 2% goal did not get the answer for it. In the 10-year notes, we've got the same problem here. We've made a lower low, so we can say we had a higher high, lower low, back to neutral territory. Dollar index, how many times you want to just stay within this tightness? You're not really doing anything. You try to get a downtrend, it fails. It doesn't want to stay under the 18-day average of closes. And in the euro currency, it threw in the towel today. If it got under this break low, you stepped out of your uptrend, and it's exactly what it did. It actually threw itself into a short-term downtrend. The question is, can it go anywhere? It has been stuck like the dollar. We haven't had any currency plays that have broken out. In the British pound, why go through the Bank of England statement? We don't know what they're going to say. The Brexit thing's totally nuts. If you're watching what's going on, everybody's posturing. October 15th is right around the corner, less than a month away. What are the Brits going to do? At the last minute, the way that Europe always works in the past, they make deals right at the very end. Still wouldn't be surprised if that's the case. As we were talking the other evening, as the market was coming up, I said, watch out, you might be headed back to that 18-day average, but that should be a problem for the market. It's how it worked out. Then we get to the differential between November Brent and WTI oil, hanging here under $2. I was surprised at this rally. And you lost the embedded reading, which means this bear wave in Brent is over. Look for the 18-day average of closes is what my work says, the red line. The same in the WTI, which it did not have the embedded reading. It just lost it, but it looks like it too wants to fight a battle there. Gasoline lost its embedded reading. No, it never had one. It was just oversold, and it went back up today to the 18-day average, not trending, and just sort of sitting here. And nat gas, well, this is that story at this time of year I keep talking about. I have not seen where Hurricane Sally's done real serious damage to anything in the energy complex, but we'll see. More news will be coming out about that. I do want to remind you, with all this going on, with what we're seeing in foreign currencies, the dollar sitting here, interest rates threatening to stay low, how is that going to impact commodities? I think it's going to be bullish them in the long term. Without a strong dollar, it makes buying of our goods better. I'm an optimist. You have to be. You have to say that at some point, and I don't know if it's this year or next year, they're going to have something in COVID that looks promising somewhere in the world. I cannot tell you if it's U.S. companies that will do it, if they're going to be out of the Asian network, if they'll be out of Europe somewhere. Doesn't matter. What really matters is getting the cure so we all get a lifestyle that's somewhat back to normal. Even JP Morgan had to send workers back home as they tried to get semblance of normal, ordering their traders and other people to come in, and then a COVID case broke out. We're all looking at the same. You think it didn't happen in my company? We were getting ready to tell people maybe we should start getting back in, and this sort of throws you for the loop right away. But we write about all that. How do you find out? Go to our website, free offerings, sign up for some of them, the research and so on. Be happy to put it in your mailbox. That's your email box. I'm Ira. You have a good day.